December 30th, 2025, just announced in Washington. Senator Cynthia Lummis confirms 2026 is now the target year for full U.S. crypto regulatory clarity. This is not speculation. This is a legislative timeline attached to the Responsible Financial Innovation Act, or RFIA. For the first time, guys, the U.S. is signaling when crypto rules stop being debated and start being enforced. If this passes, it will reshape who regulates crypto, how stablecoins operate, and how taxes are applied across every major exchange and wallet used in the United States. But the most important detail isn't the bill itself. It's what happens between now and 2026 and why institutions are already positioning themselves. Guys, in 2 minutes, I'm going to explain why this timeline matters more than the language of the bill and what crypto investors should watch next. But first, here are the confirmed facts. Senator Cynthia Lummis, alongside bipartisan co-sponsors, including Senator Tim Scott, has tied regulatory implementation of U.S. crypto markets to a 2025-2026 window. The Responsible Financial Innovation Act will aim to define who regulates crypto markets. Is it the DTCC? Is it the SEC? It will establish federal rules for stablecoins, clarify crypto tax treatment, and years of regulatory ambiguity between the SEC and the CFTC. This is not a press release. This is a legislative framework with deadlines. So here's the key question investors should be asking themselves, right? What do we need to ask ourselves here? Why would they announce a 2026 target right now when the bill isn't even law yet? Because Washington doesn't move markets with votes anymore. It moves them with timelines. And this timeline aligns with something much larger. A coordinated shift from enforcement by lawsuit to a rule-based market structure. In a moment, we will break down what changes immediately and what changes later, and why some crypto assets will benefit long before this arrives. So first, what is the immediate impact to markets, institutions, maybe overall sentiment? Okay, short term, don't expect price explosions. Okay, do not go and dump your life savings into crypto expecting that everything's going to moon. What we should maybe expect instead is reduced regulatory risk premium, more institutional pilots popping up, more cautious but committed capital allocation. Because markets, guys, they hate uncertainty. Markets hate uncertainty. And the RFIA is not going to eliminate risk, but it'll price it in. And for the first time, these funds can model compliance instead of guessing about enforcement. And that matters. That matters to markets. That matters to our crypto bags. Crypto's fun, 30% volatility, 40%, but if we could get rid of that, that'd be so much nicer. Because large capital doesn't need bullish headlines. They just want predictable rules. So, guys, next we're going to talk about why stablecoins are the real centerpiece of this bill. Because they are. They are the hidden center of the RFIA. It's not really about Bitcoin or Ethereum. It is about stablecoins. Because this bill introduces mandatory, high-quality liquid asset reserves, federal and state coordination. But this is the critical detail. Other legislation, like the Genius Act, already set July 2026 deadlines for stablecoin oversight. That means the RFIA isn't operating in isolation. It's locking onto an existing regulatory clock. Translation. Stablecoins are being positioned as regulated financial infrastructure, not experimental tokens. And that alone changes how banks, payment networks, and governments will engage with crypto. The regulatory power shift, it exists, right? The regulatory power shift is about to happen, but there's one part that nobody is talking about. It's the SEC versus the CFTC and the resolution between these two institutions that are butting head over crypto regulation. The RFIA will directly address the turf war that has frozen U.S. crypto innovation. So under the framework, many digital commodities move under the CFTC oversight. Security-like assets will remain with the SEC. Clear definitions will replace court interpretations, right? So they're going to get it out of the courts. They're going to actually put it into law, which will not weaken the regulation. It clarifies it so we know who's in charge of what. And clarity, guys, is what institutions have been waiting for. Instead of asking, is this legal? I hope so. I hope it's legal. Is it legal? They can ask, what are the requirements? What rules do we need to follow? How can we be compliant? And that is a fundamental shift in the US crypto markets. The biggest surprise, though, taxes. Taxes, taxes. That's how the rich stay rich. That's how we stay poor. You got to play the tax game. So tax clarity matters way more than price. And the RFIA included provisions to clarify who qualifies as a broker. It will defer taxes on staking and mining until you sell it. It'll define when crypto is treated as a currency. Right? It's not going to lower taxes. It just standardizes it and puts rules in place so we don't get penalized or unknowingly break tax law. You know, for builders, for funds, for miners, for big stakers and long-term holders, it removes a massive compliance overhang for everybody. And historically, tax clarity precedes capital inflows, not retail hype, which brings us to the real implication, right? The question isn't whether RFIA passes exactly as written. The question is, why is Washington comfortable to committing to a 2026 implementation window now? Because crypto is no longer viewed as optional. That's why. It's being absorbed. They have to get in front of it. They're probably already behind it, but they need this to go through. So what it really signals, this really signals one thing. The US is acknowledging digital assets are here to stay. They're a permanent market, a taxable asset class, a regulated financial layer. They're not embraced, not promoted, they are integrated. And that distinction matters. Markets don't need government enthusiasm. They need rules they can operate within. So here's the takeaway. The RFIA doesn't mean crypto wins or loses. It means crypto graduates from regulatory limbo to regulatory structure. The 2026 timeline tells us enforcement uncertainty is being replaced with rulemaking. Stablecoins are becoming regulated infrastructure, which hopefully means they'll soon be widely used everywhere. Institutional participation increases before the law is finalized. So what should we do now? Right? What should we do now? We need to keep an eye on stablecoin legislation. Are they making progress? The CFTC authority expansion, right? They're going to get a lot more things underneath them and out of the SEC, which is good. Institutional pilot programs, right? Are there more projects being kicked off? Don't watch the price action. That can be manipulated, right? Long term, think long term. Prices can be manipulated, but institutional pilot programs and actual growth cannot be faked. Because market moves, guys, market moves before clarity arrives, not after. So guys, I'm going to be tracking every update tied to this policy, tied to the RFIA to see if they actually stick to their 2026, right? We're going to be watching the Genius Act, the stablecoin rules, and the US market structure. So guys, hit like, hit subscribe if you got something out of this. And if you want the next breakdown and the next breaking news when it happens, I will bring that to you.